Hi there, welcome to Kneppy Invest and welcome to July the 22nd, 2024. I'm going to be really honest with you right now. I absolutely love days like this on the ASX because a few potential buys have popped up onto my radar, and I'll talk about these potential buys when we get to the top five stocks of the day. Now, coming in at number one, the top stock of the day with a bullet. Could it be anyone else other than Droneshield? Last time I looked, the share price of Droneshield was down about 24%. They did release their Appendix 4C this morning, and now the share price is down, 23.7%. So I will discuss Droneshield's Appendix 4C. Now, when I had a look at this particular call report from the company, and I am trading Droneshield right now, I decided to sell Droneshield on open. And I was thinking, is that a mistake or not? Because there is a saying, amateurs open the market, professionals close the market. And I thought, am I just being a little bit too hasty? Am I not giving the market enough respect? Because I thought the market would sell off on Droneshield this morning. And it has done exactly that. Share price actually opened at $1.82, and that was almost the high of the day. High of the day was $1.84, but that was, I think, Chi-X, and the share price has just plunged during the rest of the day. So down 23.7%, down even more than it was last Tuesday. And don't forget, last Monday, the share price of Droneshield closed at $2.60. Now, I want to discuss Droneshield as a top stock of the day, have a look at the call report, and also I want to discuss a question I received from Lucky Luke. What should I do? I didn't sell Droneshield, and now I'm down. I do want to discuss this particular question, but I can't answer it because it's against the law for me to give advice. So I won't give advice about what you should do, sell Droneshield, but I will talk about this particular question. And I think it is important to discuss Droneshield right now because, in my opinion, it's a plaything for day traders. Anyway, so what is the agenda in today's or for today's video? Fairly similar than all the other videos I've ever done. I'm going to have a look at two emails. One in regards to a video I've done in regards to CBA, said regards twice then. CBA, this is from Market Index. I found this email really interesting. I received that during recording of my video on CBA, which is not coincidence. Well, I suppose it is coincidence, but if you're thinking of higher meanings, then maybe you think, well, it's not a coincidence that I received this email when I was recording that video on CBA. And also have a look at Earnings Whisper. It's a pretty big week in America in regards to quarterly earnings. We'll have a look at some of the companies that will be releasing their quarterly earnings, and then we'll get into the best and worst performing sectors, indices, and companies on the ASX today. Have a look at the top five stocks of the day, and then I'll go through some charts, particularly of those companies that did not quite make it in the top five. I had a plethora of companies to choose from. In fact, one company in particular I really wanted to include in the top five stocks, but I just couldn't put it there for a few reasons. That company is Dropsuite, ticker code DSE. But have a look at the chart for that company, and I might discuss that company a little bit more when we have a look at the chart. Okay, let's have a look at these emails. First one was from Market Index. Yes, I have 15,000 emails in my inbox. That probably goes back about 5 or 6 years. Here is, I don't know who wrote this. I like this. I really, really like this. Whoever wrote this. Do we get, how do we, I want to get rid of this sidebar. Can we do that? I have no idea. Yeah, we can. There we go. It's moved past Trump. Don't care about that psychopath. Anyway, this is an article. I don't know if it's in the Market Index website at all, but this was in an email I received yesterday morning. Everyone's talking about how expensive Commonwealth Bank is right now. And funnily enough, this person, whoever did this, went through the P ratio, and they said the P ratio is 17.5. Earlier this week, I had a look at what CBA's forward returns are like when it trades above a P ratio of 17.5. Now, the P ratio of Commonwealth Bank right now is well above 17.5. It's like 22 or something. I got that from a few sites. But they talked about what is expected returns or forward returns when a company or CBA has a high P ratio, higher than 17.5 by far. But the more interesting aspect of this little article was when he started talking about the price to book ratio. Here it is. Is this it there? No, this is it here. The price to book ratio when it exceeds 3. Yes, the price to book ratio of CBA is above 3. It's only happened twice in the last 20 or 30 years. The first time, according to this particular article, was in 2006 or 2007-8, that sort of period, and then 2015. And the forward expected returns, when the PB ratio of CBA gets above 3, is really negative. And we know when it got to 3 in 2015, it took 6 years before the share price got back up to those levels. So a really interesting article from Market Index just suggesting that forward returns for CBA will be suppressed because of the valuation of the company right now. In fact, the endpoint they made right here, the forward PE returns suggest deteriorating near-term returns, which only begin to tick positive at the 2-year mark, whereas a forward PB returns suggest a rather sharp downturn over the next 12 to 14 or 12 to 24 month mark, and it might be another 5 or so years before the share price of CBA gets it back up to these levels. The other email I received, and I receive these emails every single day from Earnings Whisper, is just the list of companies that are releasing their quarterly results this week. And it's a busy week. Maybe not the busiest week. That could be next week. But it's a busy week. For instance, we have Verizon. So this is tomorrow. So they have before open and after close. I would probably guess most of the companies release their results after close. For instance, on Tuesday, so this would be Wednesday morning our time, we have Tesla, Alphabet, Visa, Texas Instruments, Chubb, Capital One, all releasing their results after close. Before open, you have Spotify, UPS, GE Aerospace, GM, Coca-Cola, Comcast, Polaris, and then during the rest of the week, we also have companies like Chipotle, Ford, IBM, Thermo Fisher Scientific, Newmont, which I believe is also listed on Australia, Whirlpool on the ASX, Whirlpool. We also have American Airlines. What else do we have here? Not as much on the Thursday, but they also have Triple M or 3M. So a big week, but I do expect next week to be even bigger, potentially. I'm just saying potentially, because usually there is one week where we get a lot of the big companies releasing their results, and I think usually it will be the last week of the quarter reporting month, if that makes sense. Anyway, so that's an interesting week ahead for us in the United States, which could have impacts on our markets, particularly if a lot of these companies beat expectations. And at this point in time, the market is saying most of these companies are going to beat expectations. So if they don't beat expectations, you should see a fair bit of a sell-off in the American markets, which should have a negative effect on us, you would think. Okay, let's have a look at the ASX today. Generally a negative day, which makes sense because it was a fairly down day on the American markets last Friday. Not only that, commodities were down a fair bit over the last 72 hours, which is the reason why mining has had a negative day, down 1.21%. Let's have a look to see if any sectors are up. Staples and discretionary. So we're talking about retail companies, Woolworths, companies like that, discretionary, retail, and the worst performing sector, energy by far, down 1.55%. So I was potentially going to have a look at Woodside. They are making or are acquiring an LNG company or something like that, and the share price was down, but that could be because energy sector is down. So maybe the market isn't hating on this acquisition; it's just overall negative sentiment in the market. Materials down by 1%, real estate down by almost 1%. And financials down by 0.75%. And if we look at the indices, they're all down. So let's just open up all the indices, and there should be a few indices up. Yeah, consumer staples, consumer discretionary. So for some reason, the market is, and it's understandable, because remember last week, quite a few retail companies released fairly bullish updates. So that bullishness is translating into this week, it seems, because consumer staples and consumer discretionary are now up. Otherwise, as you would expect, emerging companies down a fair bit. Someone did explain to me there's a lot of mining companies in emerging companies or something like that. So that actually does make sense when you think about it like that. Okay, so let's have a look. Actually, let's have a look at the ASX 20. So the ASX 20 is down by 0.74%. So we know staples, discretionary. So I'm guessing Woolworths is up. And I'm guessing Woodside, energy, Woodside, Santos are down. Financials are down, so I'm expecting BHP, Rio Tinto, Fortescue down. Probably the major banks are down. Macquarie Bank is down. Goodman Group is down. I'm trying to think of any companies up apart from Woolworths. So let's have a look at the ASX 20. I probably would suggest maybe 5 companies up, 15 down. Well, completely wrong there. 2 up, 18 down. I'm guessing one of the companies up is Woolworths. The other one, no idea. Okay, let's have a look. Wesfarmers and Woolworths. Yeah, Wesfarmers sort of makes sense, but definitely Woolworths, although Woolworths is virtually flat. And the worst performing companies today, Goodman Group, Woodside, QBE Insurance, which I suppose is financial, ANZ, National Australia Bank, CSL, and Macquarie Bank. Okay, so let's have a look at the worst and best performing companies. But we'll start off with the best. Get the good news out of the way first. Or maybe I should do it the other way. Get the worst news out before you look at the good news. But if we look at the worst performing companies, you might be so horrified you stop this video. So let's have a look at the best performing companies today. And by percentage change, the best performing company is Forbidden Foods, which is on a turnover of $186. So let's completely ignore that company. It has a market cap of 2.73 million. It's noise. Same with TrueScreen. Now, DGR Global did pop up on my radar last week. I'd say a fair bit of volatility. Let's just have a look at the chart for DGR. Up and down a fair bit the last few trading days. And I suppose that has continued into today. Yes. In fact, the last week, it's up and down like a yo-yo. That company was being benefited from some sort of financing in a London Stock Exchange company, if I remember correctly. Elsewhere, we have Royal Minerals. That has been a bit of what's a good word? A bit of a trading stock at the moment, on a bit of a tear recently. A nice little dip, and it's going up again, getting to new high today. That's a good sign for Royal Minerals. Probably would like or prefer a little bit more volume coming in today, but that chart looks pretty good. I have been trading this, but I'm getting out of trading these small spec companies just because you do have to follow them a little bit more closely than what I would like to do or prefer to do. Jupiter Energy did release their Appendix 5B, up 15.39%, but low turnover. So I might just ignore that company because it's fairly light turnover. And otherwise, nothing else there of note. Let's have a look by market cap. Get a few interesting companies here. Iress, up 9.3%. So this is one of the potential buys. Potential breakout for Iress. This company is coming in number 2 on my top stocks of the day. Dropsuite, up 9%. I really wanted to include a Dropsuite in my top stocks of the day, but I decided not to. It would have come in number 6. And the main reason is because I had to include Droneshield, had to include South 32, and I had to include the 3 companies I think could be breaking out, on the precipice of breaking out. You could even say the same about Dropsuite, but I'm probably less bullish on Dropsuite. So I might discuss that at the end of the video. DGL finally having a fairly good day today, up 5.6%. And other than that, not much here. Lark Distilling is interesting because there's another company called Mighty Craft has gone into administration. I'm not sure if Mighty Craft is beer or wine. Probably beer, I would assume. So maybe Lark Distilling is up because a competitor's gone. No idea. Anyway, let's have a look at the worst performing companies today. And Droneshield by far is at the top of the list. Another bad day for this company. In fact, performing worsts, although let's have a look at the updated chart. Oh, it's had a little bit of a rebound, only down 22.2% right now, but still 15 or so minutes left of trading. Well, 25, including the closing auction. Otherwise, Space, a little bit of a dip because share price of that company rose significantly the other day. And you always expect a little bit of a dip after a significant rise. Yeah, the share price of Space rose 85% in one day, and today it's pulling back. Totally expected for that company. Otherwise, Next Science, there's South 32. So the reason I had to include South 32, they did release their quarterly report, and the share price is down 13%, which is a big drop for a company that size. South 32 has a market cap of 13.4 billion. Usually when a mining company releases their quarterly report, you don't see much change in the share price. So obviously, the market has hated South 32's quarter. Otherwise, what else do we have here? We also have AMA Group down 11.5%. Now, I probably won't talk about AMA Group, but they did a couple raising, and that's why the share price is down by that amount. Let's have a look at the top losers by market cap, see if there's any other companies here. I think Electro Optics is just a little bit of a dip because the share price has gone on a bit of a run. Peninsula is uranium, and quite a few what do we call these? Companies that have been on good runs, Encounter Resources, Actinogen, maybe even Anson Resources, Biome, Imricor, SDI. A lot of these companies have been on really good runs, and I think this is just a bit of profit taking coming in today. So we could have a look at some of those charts, but maybe I will later in the video if I have time. Okay, so let's get to the top 5 stocks of the day, and then we'll have a look at the charts. And when I have a look at the charts, I'll suppose I'll look at about 7 companies that did not make it into the top 5 stocks of the day. Now, starting at number 5, we have South 32. I originally was not going to include South 32. I was just going to talk about this company when we look in the charts, but then I saw the share price was down a fair bit. So I thought this should be in the top 5 stocks a day. Very rarely do you see this company down 13% on the back of their quarterly report. So the quarterly report released at 8:17 a.m. I had a very quick look at this particular announcement, and then I moved on to the next one. I just didn't see anything that would have triggered an alarm. Now, that's just me. I don't know this company back to front. I was just looking, and to be honest with you, these quarterly reports from major mining companies don't usually have any surprises in them because they are covered by a lot of analysis, and the analysis is usually know what they're doing. So you don't usually see a significant response from the market when these companies release their quarterly report, but this one did. South 30 did. So I had a very quick look at their production summary: alumina, aluminium, copper, silver, lead, zinc, nickel, metallurgical coal, and I didn't see anything that was significant. Now, there are quite a few of these minerals or these commodities were down in yearly production, particularly metallurgical coal down 22% and manganese down 20%. But I thought, well, the market probably expects that because we have a lot of companies covering South 32, but obviously not. Obviously, this disappointed the market and surprised the market. So let's have a look at South 32's chart. Did we get an inkling from the market that maybe this could be forthcoming? And I think the answer to that is yes. So I actually did like South 32 not that long ago. April, May, share price started to really go on a nice run. It looked like this negative sentiment in this company was turning positive, but then that negative or that positive sentiment started to really dwindle quite quickly, hit a nice little support level back in mid-June, was starting to go on another rally, but that rally fizzled out really quickly. So that rally went from about 360 back up to about 390. And then we saw a really big down day on Monday, the 8th of July. So 2 weeks ago, share price down was about 3%. And then the share price broke through that support level last Tuesday. And that was sort of the first signal that things are not going smoothly for South 32. And then the rest of the week, share price just kept on dropping. So there is a bit of an inkling here that someone in the market didn't like the possibility of South 32 results, or maybe it was just the commodities, the mining. Maybe all these commodity prices were under stress. But you can't ignore how the market treated South 32 last week. Pretty big down week. In fact, if you look at the weekly chart, South 32 was down about 5.5% last week, and then the previous week it was down 5%. So 2 weeks in a row down by over 5%, and already this week down by 13%. So let's go back to the daily chart. And to be honest with you, when I look at this particular chart, no interest. In fact, this one-day candlestick is a fairly bearish one. You get the red body. So the share price opened near the high of the day, and looks like it might be closing near the low of the day, which is a bearish one-day candlestick. But on the flip side, maybe you're looking for value. Share price is getting towards the lows we saw back in February, which is $2.75. If we have a look at the weekly chart, yeah, that is a fairly significant support level, $2.75. It goes all the way back to 2021. Now, it could even drop lower because the lows we saw in this company back during the COVID-19 financial panic was around about $1.65. So you just don't know. This is a mining company. I have no idea which way it's going to move because they are mining quite a few commodities. Anyway, so this sort of company, I just trade. I look at the trend and just trade it. And if I look at South 32 right now, it is untradeable right now. Okay, so that's South 32 coming in at number 5. Now, the next 4 companies are the 3 companies I think are possible. I wouldn't say possible buys, but they're looking interesting for possible breakouts. Now, one company in particular is looking more interesting than the other 2. It's not this company, which is Insignia. It used to be called IOOF. So this is like a fund manager, that sort of thing. They released their 4th quarter update or business update, what do you want to call it. Share price is up 6.3%. What is interesting about this company? So I am catching up on my AusBiz The Core. So I was like over a month behind, maybe 1 week ago. And in the past week, I've really tried hard to catch up. I'm only about 3 episodes behind right now. And one of the episodes I was listening to yesterday, they mentioned Insignia and they said, and I don't want to, I have to paraphrase, I think. They said something along the lines of just wait until the inflows until the company is seeing inflows instead of outflows. And that's when the sentiment in this company might start to change from negative to positive. So I opened up this particular business update from Insignia, and lo and behold, the first highlight section in the overview was return to positive net inflows. So straight away, this piqued my interest. I went, that's interesting. They're now gone to net inflows. So this could be inflection point or a turnaround for Insignia. That's all I read. I didn't read anything else when it came to this particular report. Then I just wanted to see the reaction from the market. Share price up 6%. So then the next thing I want to look at is the chart. Is this a breakout? And it's close. I don't think it's breakout just yet, but it is getting close. Now, not the best one-day candlestick, so there has been a little bit of selling today, which is understandable. But I think you could argue the downtrend has or is potentially coming to an end. Now, you could have said it way back in January of 2023. Looked like the downtrend was coming to an end. But this company's share price has been a downtrend for a long time. In fact, if you look at the weekly chart, the share price has been a downtrend for about 7 years. Share price has dropped from above $10, in fact, above $11, all the way down to $2.51. So is this the end of this long-term downtrend? Well, I wouldn't call it just yet, but it's getting close. So let's go back to the daily chart. It's getting close. I think possibly the low has been reached, which is around about $2 or just above $2. So $2.51 right now. Possible breakout looming for Insignia. So I'm going to be following the share price and the market reaction in the next few days. And if we do see the share price starting to trend up, this could be a buy for me. And this could be, who knows how long this trade will play out. That's the other thing. I'm not even sure the valuation of this company, but I'm always looking at valuation of companies. If Insignia is cheap right now, and they are turning things around, the trend and the potential rewards could be quite high compared to a company that might be overvalued and they release an interesting or a positive update. Anyway, so I do look at valuation when I'm deciding on what trades I will use. Just notice the market is up a little bit since I started talking. So there's a bit of positivity coming into the market in the last 15 minutes or 24 minutes or so. So coming in at number 4, we have Insignia. The next on the list is Perenti. Used to be called Ausdrill. So of course they do drilling, that sort of thing. I think they might be a little bit more diversified right now. They released an announcement today titled, in fact, they released 2. So the first one was award of new contract and contract extensions. I don't usually react to those sort of announcements. Those sort of announcements don't trigger any happy thoughts in me. But announcement titled Financial Year 24 Free Cash Flow Materially Above Guidance does interest me a lot. That's telling me a few things. But I do also want to open up the announcement because what's the reasons why free cash flow is materially above guidance? And they do give reasons, a few reasons here, in fact. So significant improvement in free cash flow generation can be primarily attributed to the following factors. above forecast debtor collection, inclusive of contract rate adjustments. So that is just meaning their working capital is improved. So if you think of trade receivables and trade payables, so they're collecting those trade receivables or payables a little bit better, something like that. And the other reason they gave is a reduction in capital expenditure. Yes, capital expenditure, which actually is important for these type of companies. Now, is this just a one-off, or is this something that's going to be sustained? And this reduction in capital expenditure was only 305. Well, the reduction was 45 million because now the capital expenditure is only 305 million. Now, these two reasons actually would not trigger me to act and take a position in the company, because to me, these are just nothing to get overly excited about. It's just a change in working capital for the first one and just a decrease in capital expenditure, which who knows if this could be just a one-off. Anyway, but these two things have significantly impacted their free cash flow. But let's have a look at the chart for Perenti. And the interesting thing about Perenti, it did pop up onto my radar not that long ago, but then the share price pulled back. So I was just looking for the share price to get above this dotted line, this dashed line at $1.04, because it did look like probably a month or 2 months ago, the share price wanted to move into an uptrend. You just see it trying a couple of higher highs and a higher low. So it's trying to, but whenever the share price got to $1.04, we saw it pull back. In fact, that happened three times. First time was on the 28th of May, and then the 7th of June, and then most recently the 5th of July. Today, the share price did get above $1.04, and I thought, oh, this could be the breakout for Perenti. I have been following the share price movement of this company. I thought this could be the breakout for Perenti. Share price has pulled back during the day. So this could be a false breakout. And to be honest with you, the one-day candlestick is not the best candlestick as well. So a bit of selling has come in, and added on to the fact that it's not my favorite type of announcement. I do like that the free cash flow is better than expected. It's above guidance. But the reasons why it's above guidance, would not make me trigger happy, put it that way. And I think the market sort of agrees with me at this point in time. But again, just like Insignia, I'm going to put this company onto my watch list and just follow the fortunes over the next few days. And if the share price can get above $1.04, it could be the breakout for this company that we have all been waiting for. And I probably also mentioned, I don't think this company is expensive. In fact, I'd say this company is quite cheap. For instance, the PE ratio is only 6.2. Now, that could be because of some one-offs. So, for instance, if we have a look at TradingView's annual data for this company, income last year was 95 million. The previous year was only 41 million. So there could be, the profit for last year could have been a little bit exaggerated. And if we have a look at the semi-annual numbers, in the last half year, it was 65 million. Previous half year was 56 million. So if they can continue generating that sort of profit, this company is dirt cheap. And that's why I could be attracted to a breakout, because there could be value in this company. So you have value, a cheap company, also company's share price moving into an uptrend. So definitely following Perenti a little bit more closely now because of what I'm seeing on the chart and also this sort of announcement. Not my favorite type of announcement, but you should not ignore the market reaction to these types of announcements. Okay, Iress, probably my favorite of the three potential breakouts. Iress is up 10.1%, and I should mention I have taken a trading position again in this company. This is weird. This company released a profit upgrade. Here it is on the 1st of May. So Iress, in fact, it's mentioned in the title. Iress upgrades financial year 24 earnings. The market did not react. It took the market almost 3 months to react. And then today, Iress expects increase in adjusted EBITDA for first half 24. In fact, I look at this particular announcement to the earnings guidance upgrade. I definitely favor the earnings upgrade guidance on the 1st of May. But if you have a look at the chart, no reaction from that earnings grade update on the 1st of May. That just shows you that there's still a lot of negative sentiment in this company. And I think that negative sentiment is starting to shift. And we have seen that shift, or we did see that shift, or signs of that shift before the 22nd of July when the company released this particular announcement. I'm not even going to open up this announcement. I'm just going to I'll look at the chart and you'll see or understand what I mean. So let's have a look at Iress. Let's have a look at Iress. Okay, so the 1st of May was, where is it? 1st of May, I can't even find, there it is, it's right there. No reaction from the market. In fact, share price was down. Share price going sideways for a long period of time. In fact, from start of December all the way through to July, so about 7-month period, share price going sideways. And you can just see it's going sideways, and we know it's going sideways just by looking at it, but we're getting quite a few crossovers in the moving averages, 1, 2, 3, 4, 5. And the most recent one was last Wednesday, 17th of July. And you can see the share price starting to run up before this particular announcement. This is, I won't say it's an absolute no-brainer in not a turnaround story, but a breakout. But this by far is the best of the breakouts of these 3 companies I've just mentioned: Iress, Perenti, and Insignia. And the best way to talk about this breakout is just put a line right there. So it's probably a zone, sort of in this zone here. And when the share price broke above this, in fact, I did notice it on the 17th of July. Share price pulled back the next day. And then on Friday, the share price had a nice little rally and closed at $9. So I was thinking this could be a potential breakout before the company released this announcement today. And yeah, I've taken a position in this company with a simple stop loss down below $9. So I have no absolute confidence the share price will rally higher from here, but you need a plan. Whenever you make a trade or even an investment, you need a plan. Just don't go in blindly. So with Iress, I do have a plan if the share price pulls back. And I'd say maybe 70% of my trades are successful, 30% have failed. Who knows where Iress is going to fall? Now, talking about plans, let's have a look at this particular comment from Lucky Luke. What should I do? I didn't sell Droneshield and now I am down. First thing you have to ask yourself, so I can't give you advice. I can't say you should sell or hold your shares in Droneshield. It's actually illegal for me to do that. Now, if you're talking about Bitcoin, Ethereum, any sort of crypto, if you're talking about property, talking about art, talking about anything except for stocks, I could tell you what to do. It's a stupid rule, a ridiculous rule that I can't give you any sort of advice. And I believe that rule is in place because the major players don't want to lose power when it comes to this sort of advice. But I can tell you this. Always have a plan. Why did you buy Droneshield in the first place? Have those reasons changed since you bought? I don't know when you bought. You wouldn't have bought that long ago because you're already down, and probably you bought in the last month. So have those reasons changed? And do you just sell because you're down? That's the other thing. So many people have come to me, and I've heard this from quite a few people. Well, I'm down in this company, so as soon as the share price rallies back up to where I bought, I'm going to sell. If that is your mindset, you are not going to be successful in the long run. And always have a plan. When will you sell Droneshield? What has been happening with this company over the past week? Has that changed your mind? Don't be, if you bought for a reason and the share price dropping is influencing you, you're becoming too emotional. If you're trading Droneshield, make sure you definitely have a plan. I had a plan with Droneshield. I saw their Appendix 4C this morning and I went, this is really going to, I thought there was a good chance the share price was going to drop. I wanted to limit my exposure for any potential drop in Droneshield because I believe this is a plaything for day traders. So I thought I'm just going to close my position on open. That played out fairly well for me, but make sure you always have a plan, know why you're bought, and always have a plan knowing when to sell, unless you want to hold the company forever. If that's your plan, then it shouldn't matter. The share price is down. Okay, so let's have a look at Droneshield. Hopefully I have answered your question, Lucky Luke. Anyway, so let's have a look at Droneshield. Why is the share price down? And I did tweet about Droneshield this morning. And I just mentioned things are moving in the right direction for the company in terms of cash receipts, that sort of thing, moving up. In terms of a pipeline, moving up. But the company was significantly cash flow negative. So let's have a look at Droneshield. Share price down at 21%. Oh, we're past 4 o'clock, so we're in the closing auction. At least the share price has rallied a little bit. Close, the low of the day was $1.42. So it's up about 12 cents from the low. So again, day traders love this company right now. Day traders love volatility. That's how they make their money. those who make money love volatility. So more than likely, they're looking at the 1 minute chart, 5 minute chart, that sort of thing, and just trading this, getting in and out, in and out. So this is a plaything for day traders. Okay, so let's have a look at the Appendix 4C. A lot of commentary. Typically, when there's a lot of commentary, I go straight past the commentary and I look at the numbers. I just want to have a look at the numbers. And straight away, I went, well, $14.2 million of receipts, double what it was last quarter, but look at the cash burn, $18.9 million of cash burn in this one quarter. And so far in the year date, $29.6 million. Now, there could be reasons for that. For instance, they spent $23.6 million on product manufacturing and operating costs. So looks like they are building up their inventory. That might not be a bad thing moving forward. But my big question when I looked at this particular report from Droneshield was how the market was going to react to the fact the company is burning through a lot of cash. Not only in operations, they also spent $1.7 million in capital expenditure or property, plant, and equipment. So they burned through over $20 million of cash in one quarter. And I was thinking at about 9 a.m. after I read this, I'm not sure how the market's going to react. And I think it's going to react quite negatively. Sell on open. That was the simple thing or the simple plan I had for Droneshield. And not even thinking about buying back in, because if you have a look at the chart, just have a look at the chart. It's just, there's just too much volatility right now for me. Share price is all over the place. 3 big down days in the last 5. Share price has dropped from about $2.71 to $1.55 or whatever. If you have a look at the 1 hourly chart, I was a little bit hopeful that not the 1 hourly chart. I was looking at the 1 minute chart. So I was looking at the 1 minute chart. This is why this is a plaything of day traders. So if you look at the 1 minute chart, yeah, straight away on open, share price dropped. So I sold right on open, $1.82, which is almost the high of the day. But if you do look at the 1 minute chart, and maybe some day traders are getting in there now because it's starting to turn positive. It's run up for $1.42, the low of the day at 3 p.m. So almost when I started this video, and has now run up to $1.54. So maybe there's a little bit of positive sentiment in this company, very short-term positive sentiment. Now, other than that, if you look at the commentary, and I went quickly through the commentary, so they're focusing on the first half results. They're talking about a strong revenue growth, cash receipts growth, SaaS revenue growth, profit and loss. They're completely ignoring the really good quarter a few quarters ago, which I'll look at in a second. They're also talking about the pipeline. So pretty big pipeline. They also released a presentation. So pretty big pipeline. But I'll be honest with you, all that meant nothing for me. It's just how the market reacts, because as I've said, this is a plaything for traders right now. The share price could drop another 50%, or it could rise 50% from here. I just don't know. And in those sort of situations, I'm getting the hell out. I prefer not to be in companies or stocks that are playthings for day traders. And definitely Droneshield is that. Okay, so let's have a look at Droneshield's quarterly receipts. Here it is. Droneshield's quarterly receipts. They had a really good quarter, the December quarter 2024. So that's 2 quarters ago. $47.9 million of receipts. So receipts and revenue are going to be quite lumpy for this company. That's one thing you have to understand if you think this company is a great investment over the next 5 years. You have to get used to this sort of volatility if you think this company is a long-term investment. So we have had 2 significant lumpy quarters. First one was in the June quarter 2021, $7.4 million of receipts. On either side of that quarter, $1.7 million of receipts. On either side of the $47.9 million of receipts, we had $7.7 million and $7.1 million. Now, the good thing is receipts are moving up. $14.2 million is the second best quarter and double last quarter. But again, lumpiness. So unfortunately for Droneshield, it's more of a trading stock, in my opinion, right now. Okay, so let's have a quick look at a few other companies that did not quite make it into my top 5 stocks of the day. Woodside, making an acquisition, it seems like. Share price is down, but overall negative sentiment in the energy market has just meant share price has dropped today. And to be honest with you, when I look at this particular chart, I'm just not excited, which is really interesting because I do listen to quite a few podcasts, videos, and quite a few traders we're excited about Woodside. I just don't understand. I just don't see much upside, to be honest with you, with Woodside. And again, it's a mining company, so gas and oil. And if gas and oil fall like a rock, Woodside Energy share price is going to fall like a rock as well. GDG released a quarterly update today. This share price or this chart looks pretty good. Share price is flat, which is interesting in itself. Let's just have a look. GDG, Generation Development Group, June quarter update. Yeah, share price is flat. Share price was as high as $2.57, but this is a nice looking chart. So have a look at this cover. I have not delved deeply into Generation Development Group, but this chart looks pretty good. Dropsuite. Actually, I'll leave Dropsuite to last if I remember. A company called Aumake up 50%. Share price less than 1 cent. Ignore this. Share price was 0.4 cents. Now it's 0.6 cents. They enter into a strategic procurement framework, whatever that means. But again, look where the share price is, 0.6 cents. And then have a look at the chart. Ugly chart. This is sort of one of those Chinese, what do they call them? When they have the Chinese buyers coming in, buying stuff. I'm going to get rid of this moving average ribbon. Share price before COVID-19 for this company was, we can't even see it because there it is. Share price of this company before COVID-19, where is it? 2020. Before COVID-19 was above 20 cents. Now it's 0.7 cents. So this company has been significantly affected by COVID-19 and the loss of those Chinese people coming in to Australia and buying stuff up. What do you call that? Daegu, whatever it's called. Share price has been on a run lately, but it's gone from 0.2 cents to 0.6 cents. But again, share price is below 1 cent. No interest at all in that company. But AMA Group, capital raising today. Is this the end? I did have a look at their quarterly report, and I was actually a little bit interested in it. And I think potentially, even though I would consider this company really low quality, potential turnaround. Eventually, potential turnaround with this company if they have their balance sheet in order. That's very important. Always have a look at this company's balance sheet because they have high debt, a low margin company. But the last quarterly results looked okay. Company called Mighty Craft, gone into administration, 0.5 cents. Appointment of voluntary administrations. And the question is, should you have been a shareholder in this company? And I'd probably say, and just putting on my technical analysis hat, why would you have been holding this company? Chart looks horrendous, doesn't it? Share price just kept on dropping. This is the problem when you have a company like this. The share price can keep on dropping to zero. Now, this is not necessarily the end of Mighty Craft. I'm not sure why voluntary administrators have been appointed, but there could be some hope for this company. Haven't even opened up that announcement. And finally, Swoop, a company I actually do own. I'm just waiting for a turnaround, not a turnaround. As soon as this company hits an inflection point, free cash flow, and they're very close to that, I think the share price of this company can go on a significant run. Swoop to significantly expand its fiber infrastructure. So I'm just waiting patiently. This is just me being patient. I'm not going to sell shares in this company because I do think eventually they're going to become free cash flow positive and share price still in a downtrend. So even though I'm talking about don't buy companies whose share price in downtrend, here's me holding a company. But I do have a little bit of confidence that this company will eventually get into free cash flow and profitability, and the share price, I think, will go on a significant run after that. Now on to Dropsuite, a company that almost made it into my top 5 stocks of the day. Share price up 10.75%. Quarterly business update. Let's open this up. And chart looks actually pretty good as well. My one complaint, everything's moving in the right direction. ARR moving up. Record seat adds 112,000. Monthly ARPU up 5%. Product gross margin 69%. Operating cash flow 54,000 or 540,000. It's my one complaint. This company for the last 2 or 3 years has been operating cash flow positive by a small amount. So the company hasn't quite achieved operating leverage that I would like to see just yet. The market cap of the company is over $200 million, but the market disagrees with me. The market likes this particular announcement, and I did see a few tweets. So the market does like it, and the chart actually doesn't look that bad either. Potential breakout for Dropsuite, but I just prefer a little bit more of operating cash flow and free cash flow in the business because elsewhere, otherwise the company is growing quite nicely. So that's Dropsuite, closely almost made it into my top 5 stocks of the day. Other companies released their Appendix 4C or 5B. K2 Fly, irrelevant. Companies being taken out, were operating cash flow and free cash flow positive. Disappointing. You probably, I don't know why you accepted a takeover bid. You've hit that inflection point. It seems like K2 Fly. You should have just waited. So this seems like an opportunistic takeover for a company that's hit that inflection point. We have seen this a few times in the past 2 years, where companies just about hit that inflection point, then they get taken over, hit that inflection point. And I'm just thinking, why? Just be patient. Management, be patient. Believe in yourselves. K2 Fly, cash flow positive, but who cares? They're being taken over. Jupiter Energy up 15.4% on an okay Penny's 5B. This is an oil producer, not a very big oil producer, but receipts 3.3 million, operating cash flow positive 1.4 million. For the year, they had $4 million of operating cash flow. Not a lot of capital expenditure, so most of that fell to the bottom line. Company is fairly cheap. And the chart, last time I looked, didn't look that promising, but maybe today's changed. Now, I'm still not enamored with this particular chart. Elsewhere, a company called CL8, Harley something, released their Appendix 4C, not operating cash flow positive, so no interest. And Button released their Appendix 4C, not operating cash flow positive, and no interest in this particular company. Okay, so that's all I've got. I'll probably mention one thing. I actually, when I sold out of Droneshield, I decided to buy some shares in Clarity Pharmaceuticals. Finally, I bought some shares in Clarity Pharmaceuticals and also bought, of course, some shares in Iress. So as soon as I sold a company, bought some shares in other companies. So even if Droneshield share price goes up, if those other companies I've bought with those funds go up significantly from here, it's win. So that's the way you look at it when you sell a position in a company. Also not only look at the share price movement in that company after you sold, also have a look at the performance of those companies you bought because you have those funds. Okay, that's all I have for this particular video, daily rundown video. If you have any questions, any thoughts, leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.